In this class today, I'm going to talk about Contra accounts. So, as a review, I like to review as much as possible in accounting because there is a lot of things to remember, a lot of things to memorize, a lot of logic that you need to have in your head in a certain way. And if you don't continually review, it's easy to forget it. It's kind of like a foreign language. If you don't use it enough, eventually you'll start to forget it and it'll start to disappear from your memory. And we don't want that to happen for accounting. So as a review, remember that in order to know how to increase accounts with debits or credits, you need to know where the balances are. When the balances are on the debit side, you increase the account with a debit. When the balances are on the credit side, you increase the account with a credit. And we start from the foundation of the accounting equation, which is the foundation for all accounting. And it's also the balance sheet. Remember that assets are on the left side of the equation. And because they're on the left side of the equation, these accounts have debit balances and increase with a debit. And so assets would be accounts like cash, accounts receivable, inventory, prepaid rent, prepaid insurance, supplies, buildings, land, equipment, patents, copyrights, goodwill, anything a business would own or have right to. On the right side of the equation, we have liabilities and equity. And because those accounts are on the right side of the equation, they will have credit balances and increase with a credit, and they'll look like this. Examples of liabilities are accounts payable, notes payable, salaries payable, taxes payable, interest payable, unearned revenue, bonds payable, pension liability, warranty liability, and so forth. Equity accounts for you guys are basically the stock accounts, common stock and preferred stock, and then retained earnings. There are other equity accounts, but those are generally covered in more advanced classes. So here in beginning accounting, those are usually the only equity accounts that we look at closely. If any others pop up along the way this semester, I'll point them out as we go. Now, one equity account, as we've talked about, it's retained earnings, and it's especially important in the debit credit discussion as it unlocks the logic of revenues, expenses, and dividends. And so retained earnings looks like this. It's an equity account. So as an equity account on the right side of the accounting equation, the balances are on the right side or on the credit side of the account. And so this will increase with a credit, and specifically what causes the increase is net income off of the income statement. The money goes out on the debit side, and what causes the account to decrease is dividends declared, monies returned to the shareholders out of the profits. Now remember, when dividends go up, retained earnings goes down, and so the dividends are on the money outside of the account. So when dividends are declared, or a greater amount of dividends are declared, then that's going to cause a larger number to be subtracted from retained earnings, because the money going out has to be subtracted mathematically. And so therefore, as dividends get bigger, retained earnings must get smaller. And that means those two accounts move in opposite directions. And so if retained earnings looks like this, which it does with the balances on the credit side, then dividends must look like this with the balances on the debit side. Net income is the part of the account that makes retained earnings bigger. It's increased with net income. Now, net income, as you know, is revenues minus expenses. So as revenues get bigger, so does net income. Since revenues make net income bigger, and since net income makes retained earnings bigger, everything's going in the same direction. So revenues and retained earnings must move in the same direction. So when retained earnings looks like this, and it does, that means revenues must look exactly the same with the balances on the credit side and increased with the credit. Now, net income makes retained earnings bigger, and net income is revenues minus expenses, but as expenses get bigger, net income gets smaller because you're subtracting a greater expense, and so you're going to have less profit, right? As my bills go up at home, as electricity bills go up, and the price of gasoline for my car goes up, and the price of food goes up, it means I have less money left over as, profit at the end of the month out of my paycheck, because I'm spending more money on all of these expenses. And so as the expenses get bigger, the income or the profit has to get smaller. Since expenses make net income smaller, but net income makes retained earnings bigger, that means expenses and retained earnings are moving in the opposite direction. And so if retained earnings looks like this with the balances on the credit side, expenses must look like this with the balances on the debit side. Okay, let's talk about the new stuff today. It's short, but it can be difficult. So you may need to watch it through a couple of times, take some notes, write some stuff down. We're going to talk about contra accounts. Now, there are 5 major types of accounts. And if you think about it in terms of the financial statements that you've looked at so far, you've looked up some companies' financial statements. There are balance sheet accounts. The balance sheet is divided into assets, liabilities, and equity, where assets have to equal liabilities plus equity. It's the accounting equation. And I mentioned earlier in this video some different asset accounts like cash and inventory, some different liability accounts like accounts payable and unearned revenue, and some different equity accounts like common stock and retained earnings. And you also have the income statement accounts, which are revenues and expenses. Revenues are things like sales, service revenue. Generally has the word revenue or sales in it somewhere. And expenses, well, there's all kinds of expenses, right? There's cost of sales, there's advertising expense, there's interest expense, there's salaries expense, there's tax expense. There's many types of expenses. As you know, if you are, running your own household, so to speak, you've got all kinds of bills. I've got all kinds of expenses. I've got electricity bill, water bill, gas bill. I've got food expense, medical expense, clothing expense. I've got gasoline expense for the car, insurance expense, repair expense for things when they break down, whether it's a car or a dishwasher or what have you. All different kinds of expenses going on here. So there's lots and lots of those, unfortunately. But these are the 5 major types of accounts: assets, liabilities, and equity, revenues, and expenses. And I think of them in terms of those 2 financial statements. Okay. Now, for today's lesson, all of these 5 types of accounts, assets, liabilities, equity, revenue, and expenses, all have contra accounts. And contra is a Latin word that means against. And it's where we get English words like contrary. When somebody's being contrary, they just want to argue. Whether they want to argue because they really believe the position they're taking, or maybe they're just trying to be annoying and get under your skin, or whatever the case may be. Some of you might be in relationships with someone who likes to argue and likes to be contrary, right? They always want to take the opposite position. They always want to play the devil's advocate in some kind of thinking, right? And so when someone is contrary, right? If I'm going to be contrary, if you say, you love a certain sports team, well, I'm just going to hate that sports team, right? I'm just going to take the opposite position, even if I don't really do it, right? I remember I used to teach at the University of Nevada, and the department secretary out there, she absolutely hated Tom Brady with a burning passion. Now me, I don't really care. I don't really follow football that closely and don't follow it enough to know who all the players are or, have favorites or things like that. So my knowledge of it is pretty minimal. But because I just like, getting under her skin, as soon as I caught wind of she hated Tom Brady, I became the biggest Tom Brady fan in the entire university, right? I mean, every time I would just look for ways to just subtly drop into a conversation how much I admired him or how great he was. He's the GOAT. He's the greatest of all time. You can't argue. He's got more rings than anybody else, so shut up. I would just be contrary, just to annoy her because I liked her, right? And so we liked teasing each other like that. And so we got along well. And so that's an example of being contrary. Sometimes it's in fun, and sometimes somebody's just trying to be, really annoying for more negative reasons, right? Just trying to get your dander up, so to speak. But in any case, coming back to accounting, all accounts have contra accounts. Now, what does that mean in an accounting standpoint? Well, that means the contra accounts always have balances that are opposite, because they're always taking the other side. They always have balances that are opposite the regular accounts. So assets, as you know, look like this because assets are normally on the debit side because assets are on the left side of the accounting equation. So if I said cash, inventory, accounts receivable, you'd say, oh, those are asset accounts. Those have balances on the debit side. But there are certain asset accounts that are contra asset accounts, and they will have balances on the credit side, right? They're contrary. They're taking the opposite position. Yeah, they're assets. They're assets, but they're contra. So they're always going to be on the other side. They're going to take the opposite balance, the opposite position, right? Just like we would if we were being contrary with someone, right? We just take the opposite of whatever they said. So if assets are normally like this, the contra assets are going to be like this, okay? Now, liabilities are the same way. Liabilities are on the right side of the accounting equation. So we would expect the balances to be on the right side or the credit side of the account. But there are contra liability accounts that look like this, right? Their balances are on the other side. Equity accounts are the same way. Equity accounts are on the right side of the accounting equation. So the balances are on the right or on the credit side of the account. But there are contra equity accounts where the balance is on the other side. Now, when the balance is on the other side, notice I go ahead and I would make the money come in on the side where the balance is, right? So a normal equity account has the money coming in on the credit side and the money going out on the debit side, as it should, because the balances are on the credit side. When I do a contra equity and the balance is flipped to the debit side, the money comes in on the debit side, right? That's one of the rules I talked about a few lessons ago and have repeated often. The money always comes in on the side of the balance. So don't forget that. Now, a note here, you already know one contra account because dividends is an equity account. But if you remember, dividends looks like this, right from our review today and from the last lesson. Dividends has balances on the debit side. So dividends is an equity account. Most equity accounts look like this with the balance on the credit side. Dividends is an equity account where the balance is on the debit side. So you already know one contra account, and this is dividends, which is a contra equity account. It's an equity account, but because the balance is on the opposite side of an equity account, then I call it a contra equity account. As a further note here, you will find that dividends is an exception to almost every accounting rule created, right? It turns out that dividends is always an exception. When I say always, I mean like 99% of the time it's an exception to whatever I'm doing. So always have kind of bells going off in your head whenever you're messing with dividends, because it usually is an exception to a lot of things. For instance, I know that the balance sheet account is assets equals liabilities plus equity. So all the assets, all the liabilities, and all the equity accounts are on the balance sheet, except dividends. Dividends is an equity account, but it does not appear on the balance sheet. It doesn't appear on the income statement either. We'll talk about later where it does go. But it doesn't show up on the balance sheet, even though it's an equity account. Again, it's an exception. So we'll talk about that more later as we get into the financial statement preparation later on in the accounting cycle that we're going to study this semester. But for right now, dividends is an equity account. So this is why, if you go back earlier in the video, I talked about the 5 major types of accounts. I said assets, liabilities, equity, revenues, and expenses. Some of you may have thought in your head, well, why didn't you mention dividends? I mean, we've talked about dividends. Why isn't that like a 6th type of account? Because dividends is an equity account. It's not like its own separate type. It's an equity account. It's just contra equity, right? And it doesn't appear on the balance sheet, so I'll remember that for later. But you already know one, so good for you. So again, dividends looks like this. Now, revenues. A revenue account looks like this with a balance on the credit side, but we do have contra revenue accounts where the balance will flip to the debit side. And of course, we have expense accounts where the balance is on the debit side, but we have contra expense accounts where the balance will flip to the credit side. This is why it is vital in accounting that you know where the balances are for the regular accounts, right? We spent a lot of time talking about, how do we know where the balance is? And we went through the accounting equation, and then we went through the retained earnings account to figure out dividends and revenues and expenses. You got to know where the balances are on the regular accounts. That will tell you where the balances are for the contra accounts, right? If I don't even know that an expense account has a balance on a debit side, how could I possibly know that the contra expense account would have a balance on the credit side, right? I mean, I won't. I'm just guessing at that point. So if you don't know where the regular account is, you can't possibly know where the contra account is. So this is why I've been emphasizing learning where the balances are, because otherwise accounting gets really, really confusing really fast, right? And this is why a lot of people don't do well at accounting, right? Because they don't take the time to learn the basics about where the account balances are. So when they don't know where the account balances are, they don't know how to make accounts go up or down. And they also have no idea what to do with contra accounts. And so it's just one big giant pile of confusion, which tends to lead to low exam scores and the like, right? And I don't want that to happen to you, even though this is an online class. It kind of makes it extra challenging in a sense. But take the time to learn where the regular balances are. And if you're having any type of confusion about this, make sure you email me, right? Or you can stop by my office in the syllabus on Blackboard. I do teach on campus during the semester. And if you're also on campus during the semester taking other classes, you can always stop by during my office hours and talk to me, okay? Or you can email me and say, hey, your office hours don't really work for me. Is there another time we can meet, that you'll be on campus? Maybe so. And if not, we can meet by Zoom. We can say, hey, let's set up a Zoom meeting for, this evening at 7 p.m. or whatever time works for both of us on whatever day. And we'll work it out, right? And we'll talk about it and we'll try to get you squared away. The other thing you might do is you might read the textbook, right? I have an ebook link on Blackboard where you can go into Cengage and access the ebook. And if you don't have your own physical copy, and I believe this stuff is in chapter 2. So you can find the explanation of, how to know where the balance is and how to make accounts go up and down in the discussion in chapter 2 of the textbook. And you might find that you like the way the authors explain it better than I do. And if so, that's fine. I don't take it personally. I mean, if you think the textbook authors explain it better than I do, then read the textbook and learn more. If you think I explain it better than the textbook authors, then listen to me and learn more, right? The point is to learn the material, to learn more. So however that happens, whether it's me, whether it's the textbook authors, whether it's somebody making an accounting video on YouTube or someplace like that, yeah, you might find a website that you really like that explains accounting basics really well. So it's your education. So take ownership of it. And don't just say, well, Bergner, he's confusing, so I'm just going to give up. Well, no, that's not the answer. The answer is it's your education. I'm doing the best I can, but I don't claim to be the best in the world either. So you might find another source that you just like better, that works for your brain better, that makes more sense to you than I do, and do it. I've had students come up to me in other classes and say, I really like the way you explain things. Well, then pay attention to the way I explain things. And I've had students come up and say, you explained it this way, but I read it in the book and the book makes more sense. Well, then you read the book, because if it makes more sense to you, then you go by that. Because the ultimate point is to learn the material. So whatever gets it into your memory, into your long-term memory, that's the way you want to go. Now, you already know one contra account, which is dividends. I'm not going to go over a whole bunch of contra accounts. Right. We don't cover a lot of them in Accounting 220 anyway. There'll be a handful of them that we cover. But rather than worry about which accounts are contra accounts, right, what I'm going to do is I just want you to focus on the fundamental understanding of where the balances are for contra accounts. And then as the specific contra accounts like dividends come up in future lessons, in future problems that we're working in class or, and problems out of the book during class. As those accounts come up, I'll point them out and explain them. And then you kind of add that to your Contra account bank. Okay. And like I said, in Accounting 220, it's not like there's going to be 50 of them. I mean, just off the top of my head, there might be, 5, 6, 7, somewhere like that. It's certainly not going to be more than 15 or 20. There's no way. Maybe 10 max. As I said, I'm just doing this off the top of my head. So we'll deal with the Contra accounts as they come up one at a time. And then you just kind of have this bank in your head of Contra accounts as you go, so you'll know what to do with it when you see it. Okay, there's an assignment on Blackboard today. Make sure you read the questions carefully. I'm going to ask you some questions about regular accounts and some questions about Contra accounts. So make sure you're thinking about that carefully. You may want to take notes, write down the accounts on a sheet of paper from memory. That's an excellent study technique. If you're struggling with figuring out where the balances are, take out a blank sheet of paper, mute me, close the book, turn off your browser, and just say, can I draw assets, liabilities, equity, revenue, expenses, and put the balances in, beginning balance, ending balance, money coming in, money going out, just from your memory, right? Don't look at your notes while you're doing it. That's cheating. Don't look at the book while you're doing it. That's cheating. Don't look stuff up online while you're doing it. That's cheating. You're testing yourself. You're putting yourself in that exam situation where you've got to pull it out of your memory. That's the way to study. Put yourself in an exam situation. Test yourself. It's low stakes. It's no points. But you're really seeing, you're being honest with yourself. What do I know? Right? A lot of times it's easy to look at the notes as you go and cheat, and then you're lying to yourself. You tell yourself you know it, but you don't really know it because you got to look at your notes or you got to look it up, online somewhere. So do it from memory. Test yourself just like you would get on an exam. This works for accounting, works for any class. Anyway, as usual, let me know if you have any questions.